I'm Caroline Hyde. This is Bloomberg Technology. Coming up, Bitcoin crashes after US regulators reject an ETF backed by the Winklevoss twins. Details ahead. Plus, capitalizing off the crackdown, why Baidu's billionaire CEO thinks the travel ban will steer top tech talent to China. And Tesla's power move. As the US braces for an infrastructure boom, Elon Musk could land a parking spot right in the middle of all the action. We'll explain. But first to our lead. Bitcoin crashes after the US Securities and Exchange Commission rejected an application for a Bitcoin exchange-traded fund backed by the Winklevoss twins. Take a quick look at my Bloomberg terminal if you can, because we're currently seeing the price of the cryptocurrency plummeting in the moments after the decision. We're currently seeing it down some 8.2%, as we'll currently see. That's on the day. But I just want to bring you what the one-year chart is currently doing, because you've got to put it in perspective. This is a volatile asset. It's last fell this amount just in January. So Bloomberg's editor-at-large, Corey Johnson, joins us now with more context. Corey, SEC seemed to be on a knife edge. What exactly happened?
So the Winklevoss twins have been for 3 years trying to create this new ETF, an ETF that would represent the price of Bitcoin. But it would, in a certain sense, give a lot more people access to trade this thing and put a lot more money potentially into trading it. But it also would have put money into their pocket. So the ETF would have had money to spend to buy Bitcoin. So just depending on the size of that offering, and that changed over time, they would have been able to go into the Bitcoin market and acquire Bitcoin, actual Bitcoin, as a backstop to the proxy that is traded as an ETF. When that big buyer, who was thought to get approved, and of course the Bitcoin people all believing it, disappeared from the market with a press release today right after the close, Bitcoin, of course, which trades around the clock, sold off like crazy. Bitcoin is off about 23%. It was very just crazy trading, very actively trading. And when it turned around, now it's come back. Now it's only down about 8% right now, as you showed in your chart, recovering from those first sales. But a big surprise, I think, to the Bitcoin community.
Let's just show the viewers what it's done in the one-year basis as well, though, because this is a volatile asset, as we know. It's down, but it's still, you know, just as high as we were seeing just back in early February. So how much euphoria was built into this asset about the ETF?
I think what it shows more is that it's not so much about a fundamental belief in the value of it in terms of day-to-day trading. It is very volatile because a little bit of trading can move the price a lot. It's not a very deep market. So when you blow through the couple of sellers who are there in the market, all of a sudden you see the price drop a lot because the next ticks, the next bids that are for sale of Bitcoin are so far below the current price because the market's so thin. And there was hope that this Bitcoin ETF would actually provide some more liquidity into the marketplace to make it less volatile. The SEC didn't see it that way and decided to pull out of it. I think the real thing that seems to be moving Bitcoin price is actually trading in China. Most Bitcoin trades take place in China.
And retail investors.
Yeah, and it may be a lot of people trying to get money out of China or trying to get assets out of China and using Bitcoin as a way to do it.
Do you think that rampant demand from China is still continuing? I mean, what's the overall support for this asset class going forward?
I mean, that's the understanding that most of the trades, we find out sort of later when trades start to be understood about where the trading was happening. But again, I've seen stats as high as 90% of all Bitcoin trading is taking place in China, and that's probably got nothing to do with the Winklevoss.
Winklevoss. What was the driver? A plural time.
Yes.
What was the driver behind the
mother
ETF?
Tongue. I'm just the driver behind this. I think again was a function for these guys to try to create some more money. They own a lot of Bitcoin
in terms of trading,
and bring trading of that ETF really to all markets. But it would have created a regular stock exchange proxy for this currency in the way that there are some other proxies for other currencies and gold and so on.
Well, we'll see how volumes do indeed pan out and where indeed they were all coming from. As ever, Corey Johnson shedding light on the facts for us from, of course, our editor-at-large. Now, the largest US jobs figures delivered a surprise to the upside. 235,000 jobs were added last month in the United States. Unemployment rate fell to 4.7% and wages grew 2.8% year over year. Now, much of these gains come from jobs in construction and manufacturing. A pretty solid start for the Trump administration, but many continue to wonder, will the momentum keep up, especially those in tech sector, with growing concerns about the new reforms on the H-1B visa, limiting the flow of top talent. Joining us now from New York, General Assembly CEO Jake Schwartz, and my guest host for the hour, friend of the show, Techonomy CEO David Kirkpatrick. Gentlemen, thank you very much indeed for joining me. It's very hard when you go into non-farm payrolls on the Bloomberg, when you're digging into it. The IT sector is rather hard to show an illumination of, and it seems that jobs are pretty, in fact, flat. Zero was created in this particular particular month. But Jake, give us where you think technology is in terms of demand and supply.
Well, first of all, we're seeing a massive secular increase in the demand for people with tech skills. That's no secret. It's been going on for a while, and it's continuing at a very healthy pace. And I think in that context, what we're seeing right now, really in the last 6 months or so, is companies finally waking up a little bit that because they have such a demand for tech talent and frankly there's a limited supply, they are aggressively working with companies like ours to think about really alternative ways of generating that talent, whether it's radically reskilling existing employees or finding alternative pipelines of talent to go after. And for us, that's all part of this really overall secular trend. That's less to do with any immediate moment of the economy and more to do with what's happening to the economy overall.
And the need for retraining there. David, I want to bring you in on really where you're seeing and talking to people in New York, Silicon Valley. There is this demand for retraining, and could the slowing, the putting on the brakes of the H-1B visa in terms of fast tracking actually build up more talent within the United States, or is it just too slow?
I think there's demand across the board, as Jake's pointing out, and I think, it actually contradicts the sort of tech industry meme about jobs being destroyed by automation that everybody wrings their hands about so routinely. I think there is a lot of job creation coming because of technology. It will help Americans who have tech skills that H-1B visas are harder to obtain. On the other hand, that will also hurt tech companies, which may impair their growth, and then long-term might hurt American jobs. So that's not a positive thing, in my opinion, on balance. But I think people, and I also would say this month-to-month change in jobs is not going to be affected one way or the other by tech either way. I don't think you can identify it in that way. But I am absolutely an optimist about tech's ability to create jobs. As Jake points out, if you have skills, you are in demand right now.
And Jake, your General Assembly is about reskilling, repurposing. You've got 70,000 students, but they're not just in the United States. We're looking at Sydney, Hong Kong, London also where you are. Can you tell us a little bit about how much potentially people are being put off coming to the United States to work? How much could Donald Trump have it his way that it will all be US employees that are favored?
Well, I would say, we have gone to all those specific cities you mentioned because what we see is a truly global community of people who share the same values and aspirations for their work and their life. And so those people still exist, and they do all crave a certain level of mobility. To be able to study in Sydney and come to New York is a great perk of being part of the General Assembly community. And there is no doubt with the sort of recent travel ban news, as well as just an overall sort of difficulty around visas, that I think those policies are going to impact the amount of sort of traversing that people are going to be willing to do between country to country. We view that mobility as a net negative.
Overall a negative. David, weigh in here. Are you hearing that perhaps the likes of some of the tech giants are now doing their hiring elsewhere rather than trying to navigate the visa policies in the United States?
I think they are clearly being forced to do that or to hedge themselves to be prepared to do that as needed. I mean, this is a global situation. Companies outside the U.S. are also developing research facilities in the U.S. because you need to get talent wherever it is. And there are pockets of excellence in various countries, and we have, thankfully, an extremely large number of them here. But I think even beyond that, some tech companies are even contemplating, would they have to move their headquarters outside the U.S. under certain future circumstances if we become more and more xenophobic and more cut ourselves off from the global economy? Thankfully, that's not imminent, but I think that's not inconceivable at all.
Jake, I want to know about General Assembly and your own growth plans, therefore. Is it now the time to start really expanding across states in the United States because you really will need to retrain and retool those who are already within the country, or is it time to get global?
Well, I would say we are already global, and we believe in the global story here. But I would say that we definitely are in a moment and a movement right now where corporations are waking up to their opportunity and obligation to think about their own role in workforce development. And we are spending a lot of time and a lot of energy and seeing a lot of growth in our very close partnerships with large, successful corporations, helping them rethink how they're going to take almost obsolete employees and reskill them to make them incredibly valuable. And we're already seeing tons of that activity happen, and we believe there's going to be a lot more to come.
Jake Schwartz, ending it on an optimistic note there, General Assembly CEO, thank you very much for your time. Techonomy CEO David Kirkpatrick, you're sticking with me. Now, the rest of the world is watching as President Trump's immigration reforms take shape, including China. We spoke exclusively to Robin Li, he's the billionaire CEO of the nation's largest search engine, Baidu, and asked him, well, how he sees his country preparing to take advantage of Trump's policies.
There's a perception that the Trump administration is kind of anti-immigrant, whereas for China, if you have listened to President Xi Jinping's Davos speech, you will get a clear sense that China is more open than ever, especially for global talent, and China is willing to take on the responsibility as a large economy, a large and fast-growing economy. In fact, I think a high growth rate will automatically generate a lot of opportunities, and people naturally wants to go to a market where there are more opportunities than elsewhere.
We'll bring you more of our exclusive interview with Baidu CEO Robin Li later this hour. Still to come, President Trump promises $1 trillion infrastructure plan, and Elon Musk could win big if he plays his cards right. We'll tell you why next. This is Bloomberg. The $1 billion deal to sell Dick Clark Productions to China's Dalian Wonder Group has fallen apart. Eldridge Industries, which owns the US TV production company, has terminated the sale agreement and filed a lawsuit seeking a breakup fee, saying the Chinese conglomerate didn't pay payments on time. The potential fee is reportedly close to $25 million. In addition to the $25 million, Wonder paid Eldridge in January for extending the closing date. For Wonder, buying Dick Clark Productions would have been a first foray into US television production, given the company control of programs such as the Golden Globes. Now, the legal feud between Oculus and ZeniMax is heating up. Oculus CTO and former ZeniMax employee John Carmack filed a lawsuit against his former employer, claiming the company owes him $22.5 million in unpaid acquisition cash. Now, Carmack claims that the outstanding payment is from the sale of ID Software, which ZeniMax purchased for $150 million in 2009. Now, this is just the latest feud involving the companies to hit the courts. Last month, Oculus was ordered to pay $500 million to ZeniMax. This after a jury determined that Oculus executives violated a non-disclosure agreement in the early days of building its VR headset, the Oculus Rift. Now, Snap Options beginning to trade on Friday. The company's options market debut will allow traders to place bets on where they expect the shares to trade in the future. Bloomberg TV's editor-at-large Corey Johnson joins me in once again to dig into the terminal. And it's interesting, the numbers came out. This is a way of betting on future price moves and perhaps not quite as much appetite as previous IPOs.
It was really about the size of the business all in, first of all, just in terms of how much option trading there's going to be. But trading the options market helps support the stock market because people take sort of bigger bets or more dramatic bets either on the long or short side, or just bet on the volume itself. What we saw from Snapchat was they had pretty decent volume for the first day of options trading, but a lot less than what we saw in previous. In fact, we got our own Laura Batchel, a particular great chart comparing it to LinkedIn, Facebook, Twitter, and then Snapchat. What we saw was that the volume was pretty similar to that of what we saw on Twitter, and only a fraction of what we saw on Facebook.
So,
on the first day, I should say.
And also, what was notable about all of this was the activity seems to be largely on put options. Now,
right.
Is that bearish bets that we're seeing?
It is exactly that. So a lot of options traders will be on both sides of the trade. They'll be long and short, essentially with calls and puts at different prices and over different time periods. But what we saw here was a lot more activity, 3-to-1 activity on day one. And day one's really the only day you can really sort of see what the sentiment is in a very clear way. And on day one, we saw 3-to-1 in terms of put volume versus call volume. There's people taking options bets, some as near as next month, some as far out as 4 months from now, betting that the price is going to decline and decline substantially.
We've just got that chart up now that yourself and Laura made. Facebook clearly saw significant options volume on its trading of day one. Casting our minds back, I mean, they had the trading glitch with the NASDAQ. Were they largely bearish bets? Is this something that we usually see after the euphoria of an IPO slightly dies down?
I think it's more about the valuation itself, right? And so right after the IPO, we see so much involvement with the markets and market makers that they want to try to hedge off some of those positions using options. So put options can be quite common. It's not necessarily a bearish bet, but with this company, with the negative gross margins, without profits, with its particular structure and risk around it, I know for a fact there are a lot of people betting against it.
Corey Johnson, as ever, great to have your opinions here. Corey Johnson, Bloomberg TV editor-at-large. All things Snap option trading. Now, coming up, we tackle the biggest tech headlines of the week, including the latest on the WikiLeaks bombshell. WikiLeaks dropped another bombshell this week by publishing thousands of files on the CIA's cyber spying capabilities. It highlighted possible vulnerabilities in devices and software built by Apple, Samsung, Microsoft, and others. Now, I spoke with Bloomberg's Mark Millian and Eric Newcomer about this story, plus the other top tech headlines this week.
Yeah, WikiLeaks was also the source of some confusion as part of this data dump where they essentially made people think that you could now hack into WhatsApp and Facebook Messenger, which wasn't really the case. That wasn't contained, at least within this document data dump. But what it did show us is that the CIA has the ability to hack into virtually any consumer electronic device out there, whether it's any type of phone, computer, or even like a Samsung smart TV where they can just tap into it and listening to what's going on in your living room.
I mean, they've already started to speak out. The likes of Apple and Alphabet's Google have already been saying, look, we're closing, we've already sorted it out. And Samsung saying we're listening and we're dealing with it urgently. But do you think, how has Silicon Valley responded to this, Eric, do you think?
I don't know. To me, it's not that shocking that if they can get on your phone, they can understand a lot of what's happening. I think there was a lot of fear initially when it seemed like Signal and Telegraph and some of these encrypted messaging apps were compromised. But when it was just like, oh, the CIA, if they get on your phone, you're in big trouble. Like, I think that there's so much latent paranoia in Silicon Valley already. I think that fact wasn't particularly shocking to people.
I think that was really important, and that we all it was slightly misconstrued that they were managed to decrypt encryption, and that's really not the case.
Right. They can see the messages because they get access to the phone. They can see whatever you can see. So if you can see the messages on your phone, they can see it. But it's not an effective way. I mean, it's not the government's ideal way of hacking into these messaging apps. They would ideally like to be able to tap into the whole network like they're able to do with like the phone networks and see everything, but it doesn't look like they're able to do that yet, which actually should give us some solace that these apps are secure.
And indeed, the tension with Washington and Silicon Valley probably goes on as we see that relationship always a little bit stressed when they want to get into the certain technology. But Eric, I'm going to talk about some stress. We saw stress with one particular startup and Washington a little while ago. It was none other than Uber deciding not to be on Donald Trump's panel of advisors. But since then, I mean, where do we start with Uber? But this week, it was the mea culpa. The video that you brought us last week has now been answered, and Travis Kalanick saying, I need help, and actually I'm going to get COO.
Right. For a second, we were like, okay, he says he needs leadership help. What does that mean? And right now it's looking like they're going to hire a COO. There are reports that they've hired an executive recruiting firm, and they're going out.
Sheryl Sandberg.
Yeah, exactly. Her name comes up constantly. It's certainly with all the problems they've had. There's a strong desire to have a strong female leader at the company, and then just somebody that Travis could see as a peer and could be sort of the messenger for the company that he's clearly been unsuccessful in delivering.
Are we hearing names being circulated as to who could be that person?
I think there are, dream candidates. People talk about like Disney's old CFO, but I don't think there's any sort of specific reports of they've talked to this person and this is who they're considering. I think it's still premature for that.
Mark, as I say, where do we start with Uber? Because it's not just been that that's been all-consuming and taking our attention. There's also been the interesting report that they have something called a Grable, where it's basically trying to get away from the authorities. In cities where perhaps they're not allowed, they are able to put up an almost fake version of the app that help cars dodge certain individuals. And now that's being taken offline.
Right. There's been a never-ending parade of bad news. One of which was this gray ball circumstance. So they came out and said that they will no longer target regulators and law enforcement officials with this program, which they say that they still plan to keep because they use it for other things, such as, if they suspect somebody is going to do harm to a driver or otherwise violate the terms of service agreement within Uber, they'll use the system to sort of deceive them and think that they're actually on the system when they're not.
Eric, as the reporter on Uber, the key guy breaks all the news, how are they reacting in terms of, it has just been a perfect storm, a nightmare scenario for them, because you can sometimes have PR disasters, but to have them all seemingly in one short amount of time, it's been pretty painful.
I think the morale hit is probably the most damaging effect. I mean, delete Uber, the hashtag certainly had some impact on their business. I think a lot of the other controversies haven't had the same impact on usage, but I think there are constant. Every week on Tuesday there are these all hands meetings, and it's like Travis, the CEO, is asked to cry every week to apologize a different way. It's just a constant. And these employees could work anywhere in the world, so Uber has to provide a company that they go home to their families and they're not asked, why are you working for the bad guys?
Yeah.
And I think that's a core problem that they're facing right now.
Bloomberg Technology's Mark Millian and Eric Newcomer there. Still to come, President Trump promises $1 trillion infrastructure fund. That's something Tesla CEO Elon Musk is watching closely. We'll tell you why. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump is congratulating House Republicans for what he calls their diligent work to repeal Obamacare, and he says replacement isn't too far away. He spoke after a meeting with GOP leadership.
This is the time we're going to get it done. We're working together. We have some great results. We have tremendous spirit, and I think it's something that's just going to happen very shortly.
The EU is reminding British Prime Minister Theresa May just how tough the upcoming Brexit negotiations will be. A series of interviews and leaked documents show EU leaders vowing that the UK loses more than it gains by leaving the bloc. Germany says the EU won't grant too many concessions. Even traditional ally Ireland wants the UK to pay an exit fee. President Vladimir Putin praised the close ties between the Russian and Turkish militaries today as he hosted Turkish President Recep Erdogan. Relations between the countries were strained after Turkey shot down a Russian military jet back in 2015. Both nations have since co-brokered a ceasefire that helped reduce the scale of fighting in Syria and co-sponsored talks this year between Syrian President Bashar al-Assad's government and the opposition. Greece's main opposition party is warning Prime Minister Alexis Tsipras it will not bail out the government. Creditors are demanding more austerity measures, and Tsipras is seeking the New Democracy Party's support. We talked with the party leader.
We're not going to vote for those fiscal measures. We've made that very clear. We feel that these fiscal measures are the cost that Greece unfortunately has to pay for the incompetence of this government.
Nigeria's President Buhari returned to the country today after taking medical leave that lasted a month and a half. The 74-year-old former military dictator remained out of sight for weeks with anxiety rising steadily across the country. Buhari has yet to disclose his illness. In 2010, Nigeria went into political paralysis when a former president went to Saudi Arabia for an illness shrouded in secrecy and then died in office. In Asia, the impeachment of South Korea's President Park Geun-hye opens the door for a reset in the North Korea and China relationship. The court ousted Park today, setting the stage for elections in 60 days. The leading candidates to replace Park favor a softer touch with North Korea. They also may rethink the deployment of an anti-missile system that China opposes. And Malaysian police have now formally identified Kim Jong-nam as the victim of a fatal nerve agent attack at Kuala Lumpur's airport. Kim was the estranged half-brother of North Korea's ruler. The North has refused to acknowledge that he was the victim of that attack. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. More of Bloomberg Technology is next.
This is Bloomberg Technology. I'm Caroline Hyde. And all this week, we've been focused on U.S. infrastructure. That's after President Trump promised $1 trillion in public and private financing towards improving U.S. roads, bridges and airports. Now, one company that stands to benefit from such a large investment could be Tesla. And we know that the CEO, Elon Musk, is already advising the president on the matter. Joining us now for more is UBS analyst Colin Langan, who recently wrote a report on the cost of building out the electric vehicle charging network that Tesla needs. Also with us, of course, New York Bloomberg contributing editor David Kirkpatrick. Colin, to you first. And fascinating report that you put out. $8 billion is the price tag you think if we're going to have as much of an efficient infrastructure in terms of powering your electric vehicle as you can filling up with gas.
Yeah, I mean, that's the high end of our range. We provided a range of $2 to $8 billion. I mean, it really is going to depend because obviously you have home charging in an EV vehicle. So in the low end of the range of about $2 billion, it's about 30 minutes for the maximum person travel to a charging station for a supercharging station. And then in the extreme scenario, it's about 4 minutes, which would match the convenience of a gas station.
I see. And in terms, though, put it in perspective overall, Colin, of the amount that you see coming in terms of capital investment from Tesla as a whole, because is 2 to 8 billion a significant amount or just a drop in a rather large pool?
Quite frankly, it is a drop in a large pool. I mean, that's because that 2 to 8 billion will probably occur over many years. But it is definitely something that we don't think investors were focusing on or looking at. I mean, I think people are focused on the Model 3 launch and all the CapEx that's going to be involved in that. What we're really highlighting in our report is that once that Model 3 gets out, you're going to have to add that infrastructure. You're going to need more convenience for consumers in terms of those that want to go longer drives. And you're going to need to expand your servicing network. And all of that's going to mean higher CapEx, continued high levels of CapEx. So we remain very cautious. And cash burn remains a top concern for us.
Let's get to David and his point of view, because I know you view really Elon Musk and Tesla as a positive force within the US economy. And indeed, are we likely to see this sort of investment coming to a good end?
Well, I think it certainly helps all of us that anybody's making these investments. Colin obviously is immersed in the numbers way more than me, so far be it from me to say that, these are absolutely brilliant moves for Tesla. But I would say, he's also predicting his targets would be for the stock to drop by 1/3, which is a lot. And in a way, you could counter his argument by, and forgive me, Colin, but with in your view, overvalued stock, at least they have the ability to raise more capital with that currency that could help them pay for these investments. And I think they are certainly unqualifiedly positive for the country.
Colin would respond to us for that in terms of the price targets you have out on Tesla and the concern you have in terms of the overvaluation of the company. How much do you actually think there's been a support to the share price by the relationship we've seen being built between Washington and Elon Musk?
I mean, I think that might explain some of the recent run in the stock. I mean, I don't think there was any real fundamental reason post-election for the run. I still, believe that when I look at valuation here, I'm very cautious. I'm forecasting a pretty significant decline, but you got to realize this is a company that burned about $1 billion in the fourth quarter, probably is going to burn about $2.5 billion in the first half of the year, needs to raise capital, I think, they said on last quarter, because they're going to get very close to that cushion. So I think, at what point, will the market still be willing to issue capital to them if they continue to burn through cash?
David, it's been fascinating to watch the tightrope that Elon Musk has walked when it comes to balancing his investors' needs, the public's needs and desirability of his own products, and still keeping what is an ever closer relationship with Donald Trump.
Well, there's a lot of things that are amazing and quite fascinating about Elon Musk. I mean, the company almost went under, then was, of course, more or less saved by the U.S. government. And then, the sentiment towards what they do in terms of electric vehicles, having such a pro-environmental mindset has certainly just assisted them, from a zeitgeist point. The way the public thinks about these issues has tremendously benefited them. I think it's one of the more encouraging things about the Trump administration that people like Elon Musk are at least somewhat able to whisper in the ear of the president. We need people with his faith in tech, his faith in the need for real contemporary infrastructure, not just bridges and airports, but we need more digital infrastructure. And I'd say the things that Colin's talking about, EV charging stations, is exactly the kind of infrastructure this country needs.
Colin, give us the catalyst, if you will, for the price target you have on $160. What do you think sparks the sudden sell-off? Because it is a volatile stock.
Yeah, I mean, I think I look at it as I go into the near term. We're very concerned about cash burn, as I mentioned before. I think there's definitely risks to the Model 3 delivery target, which is very aggressive. And I think the one thing a lot of bulls aren't focused on is what will the profitability be of the Model 3 when it launches. And I think, there's a big risk. It's the economics that are very, very challenging. So that's what we remain concerned about in the near term. Long term, you have to realize there's a lot of competition coming. BMW, Mercedes, Porsche, Audi, all in the 2019 timeframe are going to be launching EVs. So competition is going to intensify. Our survey work has indicated that a lot of consumers would consider those brands very highly if they launch an EV. So we'll see how it plays out, but I think it's getting very tough.
We're going to come back to you to see as that road does indeed play out and hopefully get your viewpoints along the way. UBS analyst Colin Langan, great to have you on the program. Our guest host, David Kirkpatrick of Techonomy, sticking with me. Now, fitness startup Peloton Interactive is seeking to raise at least $120 million at a valuation of $1.2 billion, achieving so-called unicorn status. Peloton sells $2,000 stationary bikes with tablets that stream live spin classes. Bloomberg's Carol Masser spoke with the CEO, John Foley, about his funding plans just this week.
IPO this year?
No.
Because?
We are looking to do a fundraise in the next couple months that would allow us to be as aggressive as we want and take our time considering the public markets.
Next year, maybe?
Maybe.
Maybe. Because I've read something about a $10 billion valuation in 5 years. Is that real?
I would be disappointed if it weren't real. I think that certainly starts to be in the order of magnitude of what we're seeing as the opportunity here. I think that's on the low side of where we see this business going in the next 5 or 10 years.
And you can catch that full interview this Saturday on the Best of Bloomberg Technology, along with more of our best conversations of the week, including an exclusive interview with Google X and Udacity founder Sebastian Thrun. Coming up, we head to Beijing for an exclusive conversation with Baidu CEO Robin Li, how the Chinese search giant is attracting international talent, and how it plans to commercialize its AI. That's next, and this is Bloomberg. Now, the CEO of China's largest internet search engine says the country is more open to global talent than ever. In an exclusive interview in Beijing, Baidu's Robin Li spoke to Bloomberg's Tom McKenzie about how the Trump administration's immigration crackdown might benefit tech companies in China.
I think right now, at least, there's a perception that the Trump administration is kind of anti-immigrant, whereas for China, if you have listened to President Xi Jinping's Davos speech, you will get a clear sense that China is more open than ever, especially for global talent, and China is willing to take on the responsibility as a large economy, a large and fast-growing economy. In fact, I think a high growth rate will automatically generate a lot of opportunities, and people naturally wants to go to a market where there are more opportunities than elsewhere. So in Chinese, we generally say people always naturally go upwards and water naturally flows down. It's just like that. But in the past, China was not a country known for embracing immigrants, global talents, and there are lots of policies we need to improve, and we need to also make it more clear and let more people know that China welcomes all kinds of talents from all nationalities, all kinds of different cultures, backgrounds.
And what steps will you be taking as the head of Baidu to attract that talent? Because it is a fierce battle, isn't it,
yes,
in the US and globally for that tech talent. I looked on your website, you had at least a dozen posts available trying to recruit engineers in the US. So what steps are you going to take?
Well, we already have a research center in Silicon Valley with more than 100 scientists and engineers. So we already attracted lots of bright talents over there. In China, we also have like more than 10,000 engineers. I think great people attract greater people. So we already have a very good talent pool. That's one thing. The other thing is that China is a large market, right? In the age of AI, AI, I think size matters. And when you have such a large size, you can try a lot of things. You encounter new problems before anyone else encounters, then you try to solve it. You have lots of data. Smart people always have ideas. They have lots of ideas. And we have an environment, we have a platform that they can try it on. I generally say, well, okay, if you have an idea, let's take 1% of our traffic and try it on. What does 1% mean? It means millions of people who speak the same language with the same culture, with the same law, right? It's very hard to find this kind of scale anywhere else, and you can do great things with this kind of scale.
More broadly,
yeah.
How concerned are you about the potential for rising trade tensions between US and China and the implications for companies like yours that operate in both countries?
I think trade war is bad for everyone. It's so clear. I think people or politicians are just using that as a bargain chip to try to get more. They all understand it's going to hurt everybody. I don't like that. But speaking of Baidu, we have research facilities in the US. We hire people. We provide jobs, and we pay taxes, but we actually don't have a lot of revenue there. So if something bad happens, we are not the ones who get hurt the most. I also think there are great communication channels between the U.S. and China, both in the private sector and in the public sector. So the possibility of a misunderstanding is kind of low. It's just each side try to find the right balance, and it's a give and take. It's a deal making to me.
That was Baidu CEO Robin Li speaking to Bloomberg's Tom McKenzie. Much more of that exclusive interview coming up, including Li's bold plan for the company's driverless car division. Everyone's getting in on it. This is Bloomberg. Now, Baidu's focus on artificial intelligence fits into its dominance in search, but also the company's plans for autonomous cars. It now joins a race against the likes of Alphabet and Uber, who are currently battling in the courts, to develop autonomous driving and bring it to mass production. Bloomberg's Tom McKenzie spoke with Baidu CEO Robin Li in an exclusive interview.
There are lots of applications that can impact people's daily life. The most obvious one is actually search. I think AI transformed the search first before any other industry, because today you can use voice to do the search. You can take a picture to find out what kind of plant is that, right? You couldn't do that 5 years ago. That's because of AI. You use voice recognition, you use computer vision to find out what the user wants. And this can be extended to many other areas. For example, if you go to the Baidu campus, you go through a security gate. Baidu employees do not need to use their badge. They can just walk through, and our camera will automatically recognize their face and let them in. Think about that it can be applied to many other scenarios. For example, when you go to an airport, you go through the security check, you have to hand in your ID. There are lots of hassles today, but that is no longer needed when you have AI technology in place. Wherever you go, when your ID needs to be checked, you will be checked automatically using your face. You don't need to carry your ID, carry a badge around. You don't need to remember a lot of things. It's going to be very natural for people.
You've invested in AI and VR companies recently. Are you planning any more bolt-on acquisitions in this year?
I think our pace of acquisition will be roughly the same. I think there are always opportunities. There are always great entrepreneurs who do great innovations. If we find a match, if we find the synergy between Baidu and other companies is strong enough, we'll make an acquisition. But I don't have a concrete goal or target or where to go or what companies to buy.
Let's talk about driverless cars, because you've made progress there. At what stage would you consider going it alone, or are you always going to be partnering up with the automakers? Would you ever consider just building your own car from scratch?
Well, I think we are still focusing on making the driverless car technology work, and we'll worry about the business model later. But I think more than likely we will be partnered with a lot of automakers. They have their strengths, we have our strengths. The goal is to really make it happen, make it into reality, let people enjoy the benefit of driverless cars. We will do whatever it takes to achieve that goal. I think revenue and profit goes next. We're not really after profit for this kind of endeavor.
There have been reports that you would be investing $100 million in Next EV, an electric vehicle maker here in China. Can you confirm those reports?
Well, I cannot. Rumors are always rumors. We don't really comment on this kind of mergers, acquisition, or investment deals.
Okay, and you've consolidated your car unit. Would it ever be part of the plan, even to have it on the shelf, to spin off the auto unit at some point? Would that ever be a potential possibility?
That is certainly a possibility. I think at one point when we think the business is promising enough and it has reached a stage that running it independently or introducing more strategic investors would make sense, we'll do that. But right now, again, as I said, right now it's kind of early because we are still focusing on making the technology, especially the software part, work, and we will do that first.
And do you have any more details on the time frame? I know we've heard about potentially mass production of driverless cars powered by Baidu systems by 2020, 2021. Can you give us any more details on the time frame?
Yeah, I think you're right. 2020, 2021 is a good guess of when the mass production will come to reality. I think we are still on track. Again, there are lots of technologies, problems we need to work out, but we are quite confident that they will come as planned.
That was Bloomberg's Tom McKenzie with Baidu CEO and co-founder Robin Li. Still with us is David Kirkpatrick, CEO of Techonomy, and my guest host for the hour. And David, everyone wants in on this. It feels like the world is racing towards autonomous vehicles, and China could be a real player here.
Well, there were so many interesting things that Li said in that interview. Certainly his faith in self-driving vehicles and Baidu's commitment to that was one of the key things. No question that China, Next EV, the company that was mentioned, is a Chinese-initiated company that also operates in the United States already, is going to be a major player in that industry. So, yeah, this is a global opportunity for self-driving and electric vehicles, and Baidu and China are going to be major players in it.
I mean, it's fascinating, the dispute that seems to be heating up between Waymo, the self-driving unit of Alphabet's Google, which spun off, and Uber seems to be getting even hotter. That we just today understand that that Waymo has actually asked a judge to bar Uber from making or using the self-driving technology they claim was stolen. Is there going to be sometimes some sort of holding back of technology because of disputes, or do you think just generally the move is forward?
No, there's so much evolution of the actual research right now, so many different labs doing such important work on self-driving car technology that, of course, there's always legal disputes. I don't think it's going to hold back the pace of development at all. I think it's been amazing to all of us how rapidly we have gotten to this point where we are almost ready to have cars drive themselves in ordinary situations. 5 years ago, people would have said it would be a 10 or 15 year past, and we're almost there.
And it's good to take that check every now and then. David, I've got to get your view lastly, and sadly briefly, that China seems to be interested in becoming a net importer of tech talent here. Do you think that will be achieved?
I thought that was the most interesting thing in the Li interview. And by the way, that guy comes across so impressively. You can see why he's led Baidu to be one of the world's most important internet companies. I mean, they're up there alongside Facebook, Google, Amazon, Tencent, Alibaba. His way of articulating that was absolutely new to me. I was in Davos and I heard Xi Jinping talk about globalization, and he's obviously for it. But the idea that China should start to really reposition itself to be a real importer of talent, that's a big new thing.
David Kirkpatrick, as ever, great to have you on, CEO of Techonomy. That's it for this hour. Do stay with us, Bloomberg Technology.